Right now, tech founders are burning billions trying to build the next viral app or advanced AI. They are fighting a brutal war where code becomes obsolete in months. But while they sweat over servers, a tiny group of quiet investors is getting incredibly rich off of dumb, physical dirt. No code, no updates, just pure, unadulterated cash flow. Welcome to the world of invisible real estate. We aren't talking about renting apartments or managing offices. We are talking about leasing microscopic pieces of raw ground to multi-billion-dollar telecom and advertising giants. Cell towers, highway billboards, and utility infrastructure. These tiny slivers of land can quietly generate over $60,000 a month in pure, passive profit. And the best part? Software can't automate them and code can't touch them. But if this business is so lucrative, why isn't everyone doing it? Because to the untrained eye, these assets are completely invisible. You drive past them every single day, never realizing that a single unglamorous steel pole standing in a patch of weeds is yielding a higher return than a luxury apartment complex. But underneath this simple setup lies a complex, highly protective economic moat. Let's start with the core engine of this business, the microlease. When a telecom giant wants to build a cell tower to power 5G networks, they don't buy a whole acre of land. They only need a tiny 20 by 20 foot square of dirt. So they sign a highly specialized easement lease. Because the space they use is so microscopic, your operational overhead as the landowner is virtually zero. Now, you might think a tiny patch of raw dirt wouldn't rent for much. But commercial infrastructure leases operate on completely different rules than residential apartments or commercial offices. Telecom giants aren't paying for the physical dirt. They are paying for the location's strategic utility to their network grid. If your small plot of land sits at the exact intersection of 3 signal propagation arcs, it is worth a fortune to them. Because of this extreme strategic value, a single 20 by 20 foot cell tower site can lease for anywhere from $1,500 to over $5,000 a month. In high-density urban areas or key transit corridors, those numbers can scale even higher. And remember, your property tax on a tiny and used corner of a field is almost nothing. This means your net operating margin on these leases is frequently over 95%. But the real magic lies in how these corporate contracts compound. Unlike normal residential leases where you have to fight with tenants to raise the rent by $50, infrastructure contracts have automatic compounding built directly into the legal framework. Almost every single one of these leases includes a built-in annual escalation clause. So why don't these multi-billion-dollar companies just pack up and build somewhere else if the rent keeps compounding? This brings us to the concept of high switching costs. Once a carrier installs their massive steel structure, hooks it up to the fiber optic grid, and integrates it into their regional network, moving it is a logistical and financial nightmare. To decommission a tower, secure a new parcel of land nearby, negotiate a new lease, get new zoning permits, and physically move the hardware can easily cost them over $150,000. But the financial cost is only half the problem. The bigger risk is the network coverage gap. Moving a tower even a quarter mile can create a cellular dead zone, causing thousands of dropped calls and outraged customers. Mathematically, it is vastly cheaper and safer for a carrier to simply accept your escalating rent checks than to undergo the massive headache of relocation. But cell towers are only the first pillar of this invisible empire. The second pillar is standing right along our busiest highways. Digital billboards. To the average driver, a highway billboard is just a visual distraction flashing in their peripheral vision. But to an asset investor, that single steel pole is an absolute goldmine. The economics behind these structures are mind-blowing. Just like telecom carriers, outdoor advertising companies like Lamar or Outfront Media don't want to buy the land next to a busy highway. They just want the right to place a steel foundation on it. These are structured as easement ground leases. Historically, static wooden billboards displayed only one paper ad for weeks at a time. But the digital revolution completely broke the old limits of billboard math. Today, digital LED billboards rotate a brand new advertisement every 8 seconds. That means a single steel pole can host up to 8 different advertisers simultaneously, multiplying the advertising agency's revenue by 8 times on the exact same physical footprint. Because their digital margins are so incredibly high, they can easily afford to pay landowners premium. And then there is the third most secretive category, utility easements. This is where giant energy, water, and fiber optic conglomerates pay you just for the right to run their critical infrastructure across or beneath your property. Unlike cell towers or billboards, which stand visible above the ground, utility easements are often completely subterranean, buried safely out of sight. The true beauty of a utility easement is that the ground above it remains completely yours to use. You can still farm it, run a parking lot over it, or use it for storage. You are literally getting paid a massive upfront lump sum, or ongoing recurring royalty checks, for space you can still physically utilize. You are essentially double dipping on the exact same piece of dirt. When you combine these 3 assets, cell towers, digital billboards, and utility easements, you build a highly diversified, high-yield portfolio that operates completely in the background. While other landlords are dealing with leaky toilets, midnight emergency calls, and expensive tenant eviction courts, you are managing simple land contracts. Corporate giants maintain the physical structures, pay the insurance, and handle the upkeep. So, how does an everyday investor actually get started in the invisible asset space? You don't need millions of dollars. The most common playbook is land sourcing. You identify vacant commercial parcels next to high-traffic highways or in major cellular dead zones, secure an option to purchase contract on the land, pitch the location to the billboard or telecom companies, and flip the land or lease it back once a corporate contract is secured. While everyone else is chasing the same overcrowded tech stocks, crypto cycles, or highly competitive residential rentals, the real wealth is being quietly generated right beneath your feet. In the digital age, physical infrastructure is the ultimate defensive asset. To master the hidden, high-yield assets that build generational wealth, make sure to subscribe to Asset Culture. We'll see you in the next economic breakdown.